Alrighty guys, what is going up? I hope you guys are all having a great Friday today. Now in today's video, we're going to be talking about Facebook. Now why Facebook is probably the most undervalued technology stock and by far the most undervalued FANG stock. Now the FANG stocks are really the top 5 technology companies out there. We got Facebook, we have Apple, we have Netflix, and we have Google, it makes up FANG, the top 5 tech stocks in the United States. Now, the thing about Facebook that I love so much, it's historically outperformed all of the indexes, the Dow Jones, the NASDAQ, and the S&P 500. So this company's been growing at a very, very fast rate. I remember when this company IPO'd. I wish I would have bought in then, but I was literally in high school, so I didn't. But right now, Facebook does have a price to earnings rate around 28, which in my opinion is fair for this. You know, if you compare this to like Tesla on the price to earnings, Tesla has a price to earnings well over 500 or 600. So with this being only 28, some people would consider this undervalued for a growth stock for sure. And it does have a market cap almost at $1 trillion. So it's an extremely large company. It's right at around $933 billion. So why do I love Facebook? One, why do I think it's probably the most undervalued tech stock out there? Well, Facebook is more than just the site everybody has on their phone. It's more than the largest social media platform out there, right? They are in AI. They are in pretty much every technology you can think of. Autonomous driving. They're in advertising, marketing, everything. So this makes Facebook extremely profitable. They have a profit margin right now at around 36%. If you compare that to Apple, Apple is right at around 20%. So what this means is every time Facebook brings in $100, okay, they make $36, and they've been growing that every single year, which is phenomenal. You always want increasing profitability, right? That makes a solid company. So one thing, and probably the second thing that I love, is the cash on hand. Now, when evaluating a company, it's extremely important to look at the cash. The reason why is because if Facebook ever slows down or misses a couple earnings or stuff like that, you want to make sure, one, they have enough cash on hand to get through a hard time. Two, you want to make sure that they could buy out competitors. You want to make sure that they're going to use that money, reinvest it into the business, and continue to grow it, right? It's extremely important. So Facebook does have a lot of cash. It has $64 billion in cash and just sitting in cash. So that's why you always hear about Facebook buying out companies, because of how much money they bring in, how high their profit margin is. And you might be looking at it and saying, hey, well, Carter, what's their debt? You know, every company has debt. Well, they only have $12 billion in debt, which comparing to the cash on hand, that is not much, right? Another reason why I love Facebook, the third reason why I love Facebook, is they're expected to grow their revenue right around 34%, which fantastic. And they're estimated to have a 30% increase in earnings, which you can't beat that. Okay. Now, probably the last and final thing that I absolutely adore about Facebook is the price to earnings. If you compare this to all of the other FANG stocks, Facebook has the lower price to earnings. That, and with Apple, they're very, very close. But if you compare it to Amazon, Netflix, all of those other ones, Google, Facebook is really, really low, which is phenomenal because it's technically not overvalued. It's actually a fair value, if not a little undervalued for the company. So what is something that you should be a little worried about Facebook? What's the bearish outlook? Okay. So Facebook is always in the news, right? They face a lot of complex legal battles. Some politicians and the government declared Facebook a monopoly, and they have had attempts to break up the company. The government is pretty involved in Facebook, and there's a lot of controversy over some of the censorship and material on Facebook. But other than that, if you push that aside, Facebook is a phenomenal company. And I would recommend everybody to invest in it. The only downside to another bearish outlook is there's no dividends, but it's very common for a company in a growth stock like Facebook not to pay dividends, right? They want to use that money, reinvest it into the business, and overall grow it larger. Okay. And then maybe, in 10, 15, 20 years, then they start to offer a dividend. That's pretty much why multiple growth stocks out there, especially in the FANG sector, they don't offer a dividend. The only one that does is Apple. Facebook doesn't, Google doesn't, Netflix doesn't, Amazon doesn't. So, it's very rare, to be honest, that a large tech stock in a something like that offers a dividend here. So in my opinion, I really believe Facebook right now is undervalued. Looking at the chart, you guys can see that it did just hit some highs here. So what is a good strategy to use for investing in Facebook, right? The strategy that I use and one that I recommend is dollar cost averaging. Now you can do a one lump sum investment, but I really like to use Facebook's volatility to my advantage. So what this means is instead of putting up, $1,000 all up front and possibly buying at these highs here, what you do is you invest, $100 a week over the next 10 weeks or 10 months. So that principal balance is still $1,000. But what you do is you get a good average price for that time period. So if this continues to go up, guess what? You make money because the stock value is going up. But if it falls down, just like it's done in the past, especially at this price point, what you do is you just average your price down. So when the stock recovers, very similar to like when it recovered in here, you make a ton of money. And I really, really would recommend doing dollar cost averaging for a growth stock, especially one like Facebook here. But that is my analysis. That is why I believe right now Facebook is extremely undervalued. I hope you guys enjoyed it. And I know a lot of you will probably find something that you don't like about Facebook, but whatever. It's no big deal. We'll see you guys later. Remember to stay happy, guys. Stay positive, and stay safe out there. Take care, everyone.